Good morning, Paul Georgi from Allendale. It's Tuesday, May 24th. The news that we're dealing with here this morning is the planting progress report from yesterday. The USDA says we got 79% of the corn planted in the U.S. versus the 63% a week ago and 87% on a 5-year average. In soybeans, 41% planted versus 32 and 51% average. The spring wheat plantings are running way behind, 54% planted versus 89% average. And of course, in the crop conditions, the winter wheat was what we were looking for. And the number there, 45% in the poor to very poor category. So with only 32% in good to excellent category, well below what average number should be there. The concern and being talked about a lot here the last 24 hours has been prevented planting. Is the producer going to take prevented planting in the North Dakota, South Dakota area, or even over in Ohio? Talking to some of our producers up in the North Dakota area yesterday, and they'd done some calculations, and it still benefits them to try to get the corn planted even if it's late. Because they can potentially make more money than they can on the prevented planting. Some of the other concerns that producers have up in that area is they've taken prevented planting for over 3 years in a row now because it's been so wet. So it's a 3-year limit from what we understand. They can't. They won't be eligible for the prevented planting. So some concern there of what that producer might do in those areas. Certainly think that there will be a larger number of acres going to prevented planting this year, simply from an economic standpoint, if the producer can't get in the field here very soon. In North Dakota, May 25th is the date that determines the eligibility for prevented planting, which is tomorrow. So some big concerns there. Weather projects more rain and a slowdown in the ability to get in the field and get some of this stuff planted. So producers are on edge, very concerned about the ability to get this done. Other news, we've got a holiday next Monday here in the U.S., so traders will be evening up positions for that in the next several days. The end of the month is right around the corner. And also the so-called Goldman roll, where funds roll from nearby contracts out to the deferred contracts. That's scheduled to happen here late next week, so we're not very far away from that. And it seems like trade is impacting the spread between the July contracts and the December contract in corn mainly. Some huge swings there yesterday, and again this morning with the July contract under a bit of pressure with some strength and support in that December contract because of many reasons, weather, planting, progress, and so forth. Other news, China came out with some numbers overnight suggesting that their corn planted acres is going to increase about 2% next year or this coming year, with 2.5% production increase is what they're thinking right now. Wheat output will be up slightly as well, but soybean output is going to be is projected as down 6.5%, which I think has given some support to the soybean complex here overnight. Also, demand for edible oil in China has been strong, and they sold 89% of the edible oil that was offered in auction here this last week. So some good demand there, providing some carryover support for our soybean complex. The wheat market, still concerned about weather in Europe, and the southern plains and the wheat growing areas may get some rain this weekend that will be helpful, but every day that goes by it becomes less and less of a benefit, at least for the growing crop that we've got in place right now. The livestock markets under pressure again overnight. Cutout values, however, in cattle were higher. Choice up $2.06, select up $1.17. Some fill-in buying supported that market. Feedlots are very reluctant to sell cattle at these reduced prices or the drop in price that we've seen. However, we expect that we could see some further pressure in the cash market and in the futures here, as a lot of liquidation, fund selling and technical selling combined to push this market lower. In the pork complex, $2.06 lower in the pork cutout yesterday, and main reason for the weakness in the hogs is the cold storage report that we seen last weekend, last Friday anyway, that showed we had a tremendous amount of poultry in storage, which was a surprise to the trade and means that we've got competitive meats going to keep the pressure on the pork complex here for some time. Yesterday's sell-off, combination of technical, fund selling, and with the damage that we did yesterday, would expect to see some follow-through selling there as well today. So stay in touch with Allendale's research. We'll be happy to keep you informed on what's going on. So give us a call here at 800-262-7538. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.